The FinTech presentation comes from Michelangelo Giacco. Mirko will explain how we executed on FinTech so far and our plans going forward. He will also provide an introduction on himself.
Good morning and good afternoon, everyone. My name is Michelangelo Mirko Giacco, and I'm the CEO of Ooredoo Financial Technology International. My intent is to build a business that differentiates Ooredoo and creates value for shareholders. Before I start, just let me say a few words about myself. So I started my career at McKinsey, then I went into financial services at Barclays. The highlight is a couple of years ago, I set up my own FinTech, a consumer FinTech startup in the UK, which was working on open banking. At the end of last year, we exited. We sold this consumer startup to Tandem Bank, a UK PE-owned bank, backed by top-tier PE fund, Pollen Street, and Qatar Investment Authority. So I've got a track record in the industry, and I've decided to take forward Ooredoo FinTech and build a remarkable business. So last year, my colleagues have described the concept of Ooredoo entering FinTech and creating a bespoke business as part of the smart telco strategy. So today, I'm here to report the progress we've made, and I'm pleased to say the following. First, Ooredoo is definitely on track in executing its mission of becoming a smart telco. The Ooredoo FinTech business has been established. A new team has been brought in place, and I'll talk about that in a second. We are in the process of applying for license in countries where we don't have a presence, but we start from a very good starting point. We already have 370,000 active users in two markets, Qatar and Maldives, where we are definitely market leader. I'll show you our plans today, and you will see that this business has strong potential, aims for a valuation between 2 and 400 million US dollars, and also has credible upside potential. So let's go for this presentation. In the next 20 minutes, I'll show you an update, and I'll show you our direction of travel, our strategy, and most importantly, how we are executing. For Ooredoo FinTech, 2023 was the year of execution, and execution. Fundamentally, we have built the whole business from scratch. We set up the holding company, we set up the local entities, and we started to build the tech and product. I'll describe very briefly what we've done. So on the product and technology side, we have combined our product, our new tech stack from Huawei with all our partners. We've made great progress on this, and in October, we have started user acceptance testing. So fundamentally, there is a stack, there is a product that exists and is being tested. On the legal and regulatory side, we have created the FinTech holding company, and then we have created all the legal entities that will operate in the market and will hold the license. We have applied for license already in Iraq and Oman. In Iraq, we've already received approval in principle, and in Oman, we are already in stage of testing. Plus, we have carved out Ooredoo Money from the Qatar telecom business and allocated it under the FinTech operation. On the business side, we have fundamentally defined how we want to enter the markets, and we are executing our entry strategy, which is a mix of greenfield markets, where we apply for the license from scratch, and carve-outs, particularly Qatar and Maldives, where we are extracting the business out of the telco operation and allocating it into the FinTech. In addition, in every market, we have explored, and we are still exploring, acquisition options to buy existing PSP, payment service provider, with an active license. Once we have defined our entry strategy, we then moved to building the team that can execute this strategy. I'll talk about the team in a second. So in a nutshell, the message here is a lot of work has been done in 2023, and we definitely moved from strategy into execution. So our immediate task was to build a credible and strong team. I'm pleased to say that now we have a great group of strong senior executives. They all have a track record in the industry, and they have joined to lead and build this business from the ground up. These are the new hires, those that you see on the slide, and they augment and complement the existing teams that have established our businesses in Qatar and Maldives. The new hires have a couple of things in common. First, they've all worked in FinTech, and second, they all have formidable tech expertise. I want to draw your attention to a few of them. Ankit, he was my Chief Technology and Product Officer and my co-founder in the startup. He has a great track record. Together we will build the most dynamic and innovative proposition in the region. I want to draw your attention to Maria, who has an enormous, formidable digital marketing skills. And people like Casey and Alistair, who bring order and help us on the regulatory, compliance and risk part. And they come from names like Curve or GoCardless. And finally, Simon, Hamed, Tim or Peter, who are the team that fundamentally have built the product and the proposition that will soon go live in Oman as soon as we complete the process with Central Bank. So the message is I'm very confident that with this team and the existing team already in place in Qatar and Maldives, we are extremely well equipped to capture the opportunity that exists in FinTech. So the opportunity is indeed significant. So before I go into the detail of our strategy and how we are executing, I'll just recap why at Ooredoo we believe that building a business, an independent business dedicated to FinTech, is the right thing to do. Fundamentally, this is an attractive area with potential for significant shareholder value creation for three reasons. First of all, the market is large and growing. According to GSMA, mobile money is a significant business whose growth is driven by the emergence of a digital payment ecosystem, the drive to a cashless economy, the growth in cross-border remittance. So the statistics speak for themselves. In terms of mobile money, in the MENA region, there are 31 live services, nearly 60 million registered accounts, 357 million transactions, and already $21 billion of transaction value. So the market is big, is significant, and it's growing for this move to a digital and cashless economy. Not only the market is big, Ooredoo, and that's the second point, is uniquely positioned to win in this market. A few reasons. We already have a large telco subscriber base. In our footprint, in our target footprint markets, we already have 32 million subscribers. Plus, we have a great brand, a brand that is credible, that carries trust, and that will drive users to trust the application, to trust the product, and that will drive loyalty and repeat usage. Ooredoo is a group with the credibility, the muscles to invest and to attract great people and a great team. And finally, we're not starting from scratch. We have already a great starting point with our leading market presence in two markets like Qatar and Maldives. Finally, not only this is a big and growing market, not only we have the assets and the capabilities to win, but also this is a proven business model. Some of our competitors, those that have moved before Ooredoo, have started to monetize some of their investments with significantly attractive valuation. And some of the case studies are well known, from Airtel to MTN to STC, and recently the Jio IPO in India. Let me talk now about the markets in our footprint. And I want to emphasize that this is what we call our phase one. So in phase one, to start off, we're focusing on the Ooredoo footprint, 6 markets. And our objective is to achieve significant penetration and good success in those 6 markets. And then we will look at other markets where Ooredoo doesn't have a majority presence, like for example, Indonesia, or where Ooredoo does not play, for example, Saudi or Egypt. So we segment our current footprint fundamentally using two lenses. So the first lens is the degree of penetration of digital financial services. So 4 markets are already digitally established with high degree of banking penetration and good digital adoption in general in the country. 2 other markets, Iraq and Tunisia, instead are in what we call digital transformation phase. They have a higher proportion of underbanked population and a smaller digital infrastructure in the financial service sector. The other lens on which we segment our markets is our presence. As I said earlier, in 2 markets we're already live. In 4, we are in the process of applying for license. A few words very briefly about each market. So in Qatar, we're already market leader with a significant play in global remittances and corporate salary payments. Oman and Kuwait, these are markets with a large population that is really not well served by banks, but there is a high degree of digital adoption and penetration. In this market, remittances, our strategy will be remittance-led, and that will be our first focus. In the Maldives, we are live with a super app that allows peer-to-peer payments, utility payments, checkout at merchants. Iraq and Tunisia are a bit different from the others. There is still a large underbanked or unbanked population, and our objective is to financially empower this dynamic population in what we call their everyday money moments. We want to become an engine of empowerment, and we want to give consumers and merchants the tools to pay, send, receive, request money digitally, securely, and at low cost. So a few words on how we're building the businesses and what principles we are following. I'll mention 2. Fundamentally, we're building a tech business. That means a product and technology-led organization, which builds a strategic partnership, so fundamentally creates an ecosystem where we can attract other players to participate, and that keeps our capex low. We will build the product once. It's what we call a universal harmonized product. We will build it once and deploy it many times across our footprint. Obviously, we will adjust it where needed, where regulation requires that, but fundamentally it's a one product stack deployed multiple times. We will operate with the one single brand across the footprint. And we will use AI to deliver a great experience and to build in a way that is cost effective. We are already deploying AI tools in areas like user discovery and user feedback, and we will continue to use AI in areas like engineering and customer support. So a product-led, a tech-led business. Second part, important, is what we call an investor-ready business. That means creating a business that operates from day one in a mature way, a business that is very quickly attractive for potential investors. What I mean a mature way, I mean a business that is user-centric, so demonstrates very clearly that we don't burn cash in acquiring users that then don't use the app. We will be very focused on acquiring users that use the app, and we will spend our marketing money very prudently. A business that is execution-oriented, meaning has a reputation of saying what it wants to do and doing what it said it would do. A business that operates with a very, very solid governance. So fundamentally, zero tolerance for regulatory violations, a board with independent directors that applies a proper oversight and scrutiny, audited financials, etc. So a business that can stand up to scrutiny and be ready for a due diligence when it happens. And finally, a business that operates very closely with the Ooredoo mothership. We recognize that we have a lot to gain from the association with the Ooredoo and with the Ooredoo brand, particularly in terms of a lower customer acquisition cost compared to any other scale-up that would operate in this space. But also Ooredoo, as a telco business, will have something to gain from the association with a fast, dynamic and innovative FinTech business. I'm very excited now to show you what we're building. So I hope you will enjoy this video, which brings to life the proposition we're building. So let's recap what you've just seen. So fundamentally, we're building two things and one ecosystem. So we're building a B2C proposition that will allow users and consumers to make peer-to-peer payments, international remittance, domestic and international bill payment and top-ups, micro remittances. For example, that means allowing a user in Qatar to pay for the utility bill in their home country. And this use case can be absolutely disruptive and increase the frequency of cross-border payments. Users will be able to receive their salary, and our plan, it's in our roadmap, to move into salary advances and microloans. And all of this will be supported by a top-class digital experience with value-added services like a personal finance coach. The second asset that we're building is a B2B proposition. This will allow merchants and businesses in every country to receive payments, make payments, collect cash, and create and customize offers for our user base. So when you put these two things together, a B2C app and a merchant app, what we're building is an ecosystem, an integrated marketplace that brings together users and merchants in the country. The focus on execution, that has been a key ingredient of 2023, will continue in 2024. Our plan, I'll go through the three areas. In product and tech is fundamentally to complete the creation of the minimum viable product and launch it. We will deploy the minimum viable product multiple times. We will build it once and reuse it in all the markets. With the team, we look at one ratio, the reusability ratio. How much we can build once and redeploy in other markets. We aim for something like 65-70% of each component to be reused. So the focus on execution, that has been a key feature of 2023, will continue next year. Our execution plan will continue to be structured around the same three areas. So when it comes to product and tech, we will continue to build the minimum viable product, then we will launch it, and then we will enhance it. This product, our intent is to build it once and deploy it many times. One of the metrics that we keep a very close eye on is our reusability ratio, meaning how much of what we built in one country we can reuse in other countries. And we are targeting for something like 65-70% reusability. Once we build a product that is sufficient, stable and solid, we will move into other interesting areas of exploration, areas like Web3 or central bank digital currencies. And I'm pleased to say that some regulators are starting to engage with us on those topics. When it comes to legal and regulation, we are already live in Qatar and Maldives, as I said. In the first half of next year, we will complete our application processes in Iraq and Oman. And then in the second half of next year, we will complete the same process in Tunisia and Kuwait. So when I then look at the business, fundamentally, You can imagine a business that from January 1st operates in 2 countries, Qatar and Maldives. From middle of next year, we'll start to operate in 4 markets because we will add Iraq and Oman. And from January 1st, 2025, we'll be live in 6 markets. This business it becomes quite unique, far-reaching, and will be a leader in the region. So having clarified the work we've done on execution, the team that we built, our proposition and our execution plan for next year, let me close with our value creation story. And I'll do this in the next 4 and final slides. So the first point is we already have a business that is alive and successful. I'll talk about that because the message is we want to replicate the success that we have in Qatar in the other markets. So let me share with you some metrics specifically about Qatar. So when I look at the usage of the product in Qatar, we already have 350,000 active users, more than 500,000 registered. To put it in context, Qatar is a country with 3 million population. So in a nutshell, this business is already a sizable business, is an integral part of the financial ecosystem, and provides a useful, extremely useful service to a large part of the population. When it comes to some metrics and some results, we process more than 6 billion transactions per year, that's in US dollar, 2.5 billion in remittances, and we already command something like 11% of global mobile money remittances, or 30% of mobile money transaction in the MENA region, where there are 31 mobile money wallets in the region. Finally, extremely important, from a financial point of view, this business is already profitable, has roughly $10 million EBITDA, and it generates cash every year. Thirdly, this business has already achieved a lot. We have a 4.8 rating on Play Store and Apple Store. We have more than 90,000 reviews. We keep winning awards in the areas where we play, particularly with the MoneyGram, which is our long-established partner in the remittance business. So having a strong foundation in Qatar with Ooredoo Money, our objective is to replicate this success across the rest of the footprint with the product and proposition that we've described until now. Our path to value creation obviously differentiates between established markets and new markets. So in the established markets, the name of the game is very simple. We will re-platform to bring them on the same tech stack that we will use in the new markets. We will expand the offer with the significant enhancements in things like debit cards. We will enter areas like salary advances and microloans. And we will extract the synergies because we will create an operating model where a central team and a local team will generate economies of scale. From a financial point of view, financial return is that over the next 3 to 4 years, we will double the EBITDA generated in the established markets. When it comes to the new markets and the greenfield markets, the playbook is a little bit different. We operate on 3 phases. Phase 1, we apply for the license. That means writing the application, engaging with the central bank, testing. That process usually takes between 6 and 9 months based on our experience. Phase 2, we enter the market. We launch with what we call a minimum viable product. We validate the proposition. We then iterate on top. And then phase 3, where we do a large-scale commercial launch, leveraging the affiliation with the Ooredoo brand. From a financial point of view, for the new markets, our plan is based on 2 metrics. First, the time to recover the investment in customer acquisition cost. Depending on the market, that will be between 12 and 18 months. That means that after 12 to 18 months, each user will start to contribute positively. The second metric is the long-term EBITDA margin, and our plan is 35% EBITDA margin. So how far can we grow? And what could this business be worth? So there are 2 metrics that are very important. So the first metric is what is the penetration that we can achieve versus the telco subscriber base. So our experience, based on our experience in Qatar and based on what our competitors have done, is that a good number to target is 18%. That would mean that for every 100 telco subscriber, 18 would be using the mobile money service. And to put it in context, in those markets, in our target markets, we have roughly 32 million telco subscribers. When it comes to the valuation, as I said earlier, a few of our competitors have started to monetize. There are transactions happen and are happening. On average, the valuation that these companies obtain, which, by the way, is in the billions, on average, they command a valuation of roughly $105 per user. So let's fast forward to 2027. We assume that our business is operating in 6 markets. In these markets, Ooredoo Telecom has roughly 32 million subscribers. We assume we can achieve a penetration on the telco user base between 12 and 15%. Therefore, we are aiming for around 3 to 4 million users. If I take a conservative valuation of $70 to $100 per user, this business could be worth 2 to 400 million. This is what we call our base plan. On top of this, there are at least 2 areas that can expand and provide upside. First is tapping into the non-Ooredoo telco user base. For clarity, our application will be telco agnostic and so available for everyone in the country from day one. Strategically, we will prioritize the Ooredoo telco users to keep our acquisition cost low. But once we expand, once we penetrate the market and we prove the value of the proposition, we can expand into users that utilize other telco players. So expanding into the non-Ooredoo user base is the first upside. The second upside is to enter countries that are not in our current footprint. I've mentioned this plan covers 6 countries, but we're not including countries like Indonesia or other countries that are outside of the Ooredoo footprint where we could reasonably enter once we have won and conquered our own markets and demonstrated that we can be a positive disruptor and an enabler of a digital economy in those countries. So I'm pleased to close with this page because it reinforces my commitment and my team's commitment to create shareholder value.